let's start then with the outlook for Q3. Well, the outlook for Q3 in the country is bright as a number of factors and sectors look set to be in the positive. In fact, industrial activity is likely to gain traction. There is expected industrial activity, like I said, is expected to gain traction, and there could be a possible increase in government's capital expenditure that could support various sectors that include cement, iron, steel, mining and electricity. My colleague Prakash Pridarshi is here with more details of that note. So Prakash, amidst global uncertainties, it seems like the outlook for the Indian economy remains robust. We've seen a dip in GDP in Q2, but is Q3 going to be any different?
Yes, in a monthly economic review report for November, the Finance Ministry has shown confidence and made it clear that the outlook for Q3 of the current financial year appears bright on back of multiple positive development. The report has clearly mentioned that the increase in MSP for Rabi crops and high reservoirs level are among the reasons which will support Rabi sowing going forward. Along with that, industrial activity is likely to gain traction as monsoon season is over, and there is expectation that the government expenditure will increase, especially in the second half, and that will support sectors like cement, iron, steel, mining, and electricity. In addition to that, the report has also mentioned that the rural demand remains resilient. Urban demand is picking up. The most significant part of this report is its commentary, its observation about the external sector. The report has mentioned that the global uncertainties and aggressive policies by many major economies have threatened domestic growth, and therefore FY26 even looks even more challenging as new uncertainties have emerged. Global trade growth is looking more uncertain than before. The report has also noted that the elevated stock markets continue to pose a big risk for the economies. In fact, strength of the US dollar and rethink on the path of policy rates in the US have put more pressure on the currencies of emerging markets. And therefore, it requires a deeper commitment from all economic stakeholders for sustained growth.
Absolutely, Prakash. Deeper commitment from all stakeholders, including the government as well, is expected. And of course, all eyes will be on whether the government will push its capex or not, given the fact that last quarter was really all about elections. And of course, the capex did not get spent as much.
If you like this video, then like, share and subscribe to ET Now.